Hello, hope you're well. This is CoinsKid. Just going to dive into Harmony 1, ticker's 1 USDT. As you can see, it's playing out to a T basically. We unfortunately on the daily time frame though, we are under the EMA at the moment, so we are having a bit of a deep correction for one. This is Elliott wave theory. Basically, the market works in emotions. Okay, so you've got your wave 1, you draw back 2, your huge wave 3. I mean, look at that, it's a monstrous wave. So that's your wave 3. You pull back wave 4 before the final leg, the wave 5, which we're anticipating to take us up towards that $1.40 mark there for one, providing we have targeted this particular level as the pullback. If it was to pull back anymore, then obviously this would come back and this would obviously get extinguished as well, this particular fifth wave. The reason we've got that prediction there of that fifth wave is because usually it's roughly the same as the first wave, just as an experiment and a guide. It's not an exact science, but it just gives you an idea of the potential fifth wave. And obviously with it being the euphoria top of cryptocurrency market as well, towards the end of the bull market there in September, October, that we're anticipating. So far so good. I want to reassure you that it's gone up beautifully, it's come back in a wave 2 and it's formed this wave 3 and it's having a beautiful pullback right now, and it's all relatively healthy. But one thing we do need to prevent obviously is this bearish cross on the daily time frame here for one, because if you do get that, you're going to be looking at a deeper pullback for wave 4 and potentially have to readjust exactly where this wave 5 will actually take us. So these particular waves can happen quite a lot. If we do start to see a pullback and a bearish cross, just like here when we went up in this wave 1, and this is a daily time frame, don't forget the daily time frame, you can see bearish crosses without entering a bear market. Look, for example, bull market started up there, come down, bearish cross, wave 2 pullback, went back up. You can get bearish crosses on daily time frames. Not ideal, but you can get them. And even with that, you buy there, go to the beach, you sell there, go to the beach, you buy, go to the beach, day later you've got an in and out, so that's a sideways trade, and then there you've bought and gone to the beach. So look, even they're fantastic signals to get involved. And if you was involved in one down here where you bought and went to the beach and you're now potentially looking at a bearish cross, if you do get that bearish cross, that's a sell and go to the beach. Wait for the next bullish cross of this wave 4 deep correction that we may start to go through for one. That would be your buy and go to the beach signals. So those of you that are not involved in one, and we do start to form, if we do as well, this is all a big if, by the way, nothing is exact science, it's all what ifs with technical analysis, you know that, but charting it can help you. So if we do start to form this bearish cross now, okay, then I would definitely think about your position with one, not financial advice. But then if you're not involved in one after this deep wave 4 correction just here, and we do start forming that bullish cross on the daily, wow, what an entry point, what a signal to actually begin to get involved in one. Because I do expect that, just like wave 2, when you pull back and you create that ABC correction just there, if you have this ABC correction going on as well, forming a bearish cross and then a bullish cross for continuation up to that wave 5, what a signal to get involved in one. So at the minute it's flat, it's boring, it's coming down, it's testing support, and you can see on the 4-hourly time frame it don't look too clever. Okay, so that's a 4-hourly time frame. You can see that it's picked up. What I'm going to do is jump onto a different chart right now. So you can basically see on the 4-hourly time frame here, you are in a downtrend. You've got the bearish cross here contributing to your downtrend, can't get above it, and you're struggling to get above these EMAs. So unless you can get back above this yellow line like this, okay, get back above the yellow line, the 4-hourly back to support, and then get back above the red line, you will just keep coming down, because you're going to keep hitting your head, bringing you down to test levels of support. So those particular levels of support where you could potentially see bounces are really easy to target, okay, and you can do them yourself. Anyone can do them. You don't need special trend lines or indicators or anything like that. All you do is look at the chart history, okay, because you'll see this particular bottom just there. I'm going to drop that line in right now, boom, you see where that landed on a swing high. So you've already tested that swing high, you've got a level of support off it, because like what I said to you in numerous videos, when something goes up, it breaks a level of resistance. So it created a resistance level there, came back down, bounced off the EMA, boom, got through it. So what you want to see when things start to fall down, you will see it back test previous levels of support that were the previous levels of resistance. So you could see when it started to fall down, that particular level there, resting on that swing high, start to fall down, that particular level there, pressing on that swing high, and as you can see, as you cascade and start to roll down, you will see bounces off swing highs. So effectively what you've got going on here, if you was to lose this particular level right now, for one, I'm not saying you will, but I'm just saying if you start to see that deeper correction, that wave 4 correction of Elliott wave theory, which can be a relatively deep correction and a consolidation event, if you do start to see it and come down and you're thinking, wow, where's the support, then do come to your charts, because it's really easy to see the previous swing high. So this particular level here is actually a swing low and swing high, so all you got to do is target the swing low. So you would see a bounce there, in my opinion, just like you're seeing a bounce here, and a great place to enter and pick up some nice juicy trades basically. So this particular correction down here, when it corrected, it came down there and it bounced off that support level which we gave you, and it pumped right up initially at a 58% recovery, and at the moment it's currently 50% in recovery. Okay, so if it does continue to come down and keeps hitting its head, like I say to you, if it look, because you're under resistance, anyone can see that, boom, 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 resistance, 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 downtrend, downtrend, downtrend on the 4-hourly time frame. Once you start holding support and picking up, if you can march on and get through these levels, EMAs like this, okay, turn them into support, and that's your recovery, that's your march on right there. Okay, and that's that wave ABC correction over and done with, and beginning up the wave 5. But like I said in so many videos, I don't necessarily anticipate that yet, because I'm not seeing any sort of signs of that at the moment. So do anticipate that we could come down further, but again, not financial advice. Do anticipate that unless we can start seeing ourselves close above these levels, these lines on the 4-hourly time frame especially, then you are going to just be caught in that downtrend. Come down, test that, lose that, and then test that key level there as well. I will drop that in for you for one. But like I said to you, it's not the end of the bull market. The end of the bull market is when, on the weekly time frame, you start losing the EMAs. You start losing the EMAs on the weekly. That's your big sell and go to the beach signal right there. You're in and out on the daily, that can be accommodated, okay, obviously, because it's going to come in, if it does come, sorry, and then that's your exit and then get back in. But this is your, the multi-year bear market basically. If you start to form a bearish cross and lose EMAs on the weekly time frame, especially the red line, if you start to go down and hit that and come back up and start hitting your head on the yellow line, it's a big signal that you're sort of rolling over, so to speak, and you're looking for that larger correction and coming back down, and then you're entering a multi-year bear market like this, okay, where you just come back down to lower levels before making a break of the all-time high there, which I don't believe is the all-time high in this bull market for one. I just think that it's coming down, it's carrying out that wave 4 correction right there on the Elliott wave theory, and then we're going to start to see something like this after this sort of consolidation event, where you're going to go up like this in these few more waves for that wave 4, taking us up there towards September, October, the last leg of this particular bull run. But I've not got a crystal ball, it's just something that I see and I'm anticipating, okay, and right now everything is gearing up for that. So that's why I show you levels of support and levels of resistance on one. So that's basically it, little update for one on one for you there. Sorry I've not done an update yesterday, I was a bit preoccupied. So again, just target this, okay, on the 4-hourly time frame, target this particular level here. You need to see one bouncing above the yellow line, then bounce above the red line to start and form these high lows and get on with this full recovery right here. If you do see Harmony 1 break this particular level here, it's a nice level of resistance that it's got going on. If you do see it start to break that, you have got a nice little target to the upside there and a potential up trade of around, and we'll put that in for you now. So if you see it break that level of resistance, 20% trade, and that would bring you back above these EMAs and back to some support, and that would give quite a lot of confidence to the fact that you have bottomed out, that wave falls over, and you're starting to march on in the next leg of the bull market. So again, you need to keep an eye on that particular level, and I'll drop them in for you. That particular level of resistance is there at 10.6728. And if it did break that, you would see a nice little pump up there to sort of 12 cents, 12.8774 for one. So that's basically a quick update. Again, if you do keep it in your head on this level of resistance right now, because you can see you form this level of resistance, and like I said to you, you get through resistance back to support, it's golden. So if you do keep it in your head and it's starting to form down, then do anticipate you are actually going to come down to this particular level there, and that is a 34% short trade there on one. And then if it did lose that, obviously hung around there and broke through that, and we did see a major correction, then I think that wave 4 correction would be over, sort of thing, and you would be an extra 25% short down there. So that's a major correction if it did happen. So that's one. Do stay strong, stay safe, and most importantly, stay tuned. And I'll be back with an update tomorrow. Bye bye.